We are wrapping up coverage from Gold Stock Analyst Day. First time John Doody has thrown this conference. He joins me now. John, congrats on the success of your conference.
Well, great. Thank you, Daniela. It was a great time, and it was a long day from 8:30 till 5:30 when the cocktail hour began, but we had 15 of our recommended top 10 and favorite 5 silver stocks come and make presentations, and people were really enthusiastic.
You had Jim Rickards here. He's the author, the best-selling author of Currency Wars. He was your keynote speaker. I read the book. It's fantastic. And I spoke with him afterwards offline. He was telling me that $7,000 gold is not out of the question. What do you think of that?
Well, I'll take it. At this point, I'll take $2,000 gold. And there's no question that the fundamentals are in place, and whether the gold price is being suppressed or who knows what, but it's not reacting properly. But that's the way markets are. Things don't do everything in lockstep. If you want certainty in your life, put your money in the bank and get a 0.2% return. If you want a higher return, you're going to have higher risk, but that risk has its rewards. And as you know, our top 10 portfolio was up 1,200% in this bull market in the last 12 years, and we're up an average of 30% a year.
But John, are the fundamentals in place? The U.S. dollar is strengthening. The euro crisis seems to have subsided. So, and those were two of the major factors that allowed gold to rise. So,
well, to me, the key factor in gold price is the real interest rate. What do you get in a risk-free return on your money if you put your money in the savings account or if you buy short-term treasuries? What are you really getting after inflation? Well, short-term treasuries are yielding a trivial amount, as is the putting your money in the bank. So you put $100 in the bank at the beginning of the year, 2% inflation, you've got $98 of purchasing power at the end of the year. So you've got to protect it some way. You can't take it. You can't do it in a risk-free way. Mm-hmm. You've got to take risk, and some people have been doing it and successfully over the last year in the broad stock market. But over time, the gold price has proven the way to earn the best returns, and the best gold stocks is even a better way to earn the best returns. So, in the last decade, the gold stocks, our gold stocks earned 1,200%, but even gold itself earned like 450%.
But won't rising interest rates hurt gold?
Not really, because it's not just rising interest rates. Oh, there's Tommy Hilfinger's boat. It's not just rising interest rates. It's what inflation is doing relative to it. And in the late 70s, the interest rates were rising all through the 70s, but the inflation rate was higher than that. So all through the 70s, when the gold price was rising, the real interest rate was negative all through the 70s. It wasn't until early 1980s when Paul Volcker jumped the Fed funds rate to 20% ahead of the inflation rate. That's what killed the gold market. There's not going to be any increase of interest rates at all, I think, because Bernanke does not want to snuff out this bull market or this nascent economic recovery, and that means that the bull market's going to continue. But it doesn't mean it's not going to pause, and it's paused twice before for about 2 years. One was in 06 when it paused after hitting 725. It took almost 2 years to get above 725, and again later in I think it was 09 or 10, it got to 1010,
right.
and it took 2 years to get back to above it again. So here we are. We're 2 years after we hit or almost 2 years after we hit the last high. I think everything's poised for a higher gold price.
So we're in a pause now, you're saying, John, and if so, how long?
I think we're coming to the end. We've been in a...
So that was a short-lived pause.
No, it was August 11 when we hit 1985 or 95, 1895. Right. So we're at the end of that period.
All right, John, thank you so much for your thoughts, and thanks for having us here. It was great.
Well, thanks for coming and giving us coverage, and thanks for reporting all the great companies that are here.
Absolutely. Thank you, John, and thanks for watching our coverage from the Gold Stock Analyst Day. You can read more of John's thoughts and findings in his newsletter, The Gold Stock Analyst, and you can check out more videos from our coverage here on Kitco.com. Reporting from Fort Lauderdale, I'm Daniela Cambone.